So this is going to be the first video on the channel. I've started this channel so it's a way to keep a log of my trades, and it's an edition of my journal in video form. So today we're going to be taking a look at one of my trades last week. I took it on the 6th of this month. I want to start off by saying that this video is not financial advice by any means. It is just a way for me to keep myself accountable for my trades, a way for me to log my trades. So this is the trade that I took on the 6th of this month, which was a trade on Euro USD, and it was around, I took it around 4.5. So that was an hour or so after the start of London session in my time zone. This trade was a loss. It was a loss for me, and I'm going to go over the process that I took for this particular trade. So it's a short position. I'm gonna go over the market conditions. So we're gonna start from the market conditions that were prevalent at that specific time. So the market conditions, as you can see from the higher time frames, if I can just go back to where I took my trade. I forgot to mention that this is all on demo and I'm not yet on a live account. So back to where we were at market conditions prior to the trade. So we do our confluence checks on the 4 hour. We can see that the market is in consolidation prior to our trade. We can see through this particular stretch of time that it's in a phase of consolidation, as well as on the 2 hour. We can see that we are in a phase of consolidation here as well. On the 1 hour, we were also in a phase of consolidation, going down on 30 minutes. It also follows suit again with the 50-minute, a more detailed time frame. We can see that market broke. You can see that market broke structure right here prior to our trade. So that was a sign for me that market was going to shift directions to the downside. So back to our trade on the 5-minute. So went through the trading plan, the checklist. So liquidity was swept off right here. We can see liquidity being swept, and I was late to the entry because I was off doing something else on my laptop, and once I checked back, the sweep was already in full swing, and I got in around here. This was when I checked my screen again. So I identified the order block as a potential retracement entry. Let me just draw it up real quickly. This was the order block. And I also identified a fair value gap that was also a potential retracement entry right here. I already drew it out prior to recording this. So two potential forms of re-entry. So market dropped, created an FVG, and at this point I was just waiting for a retracement back up to the upside. At this point, I was just waiting for market to either hit the order block or the fair value gap so I could place a retracement entry. So this candle right here hit the order block. As you can see, it already took out uh, a point of liquidity right here. It, it broke structure down and it rallied back up and hit the order block. So this was my sign to enter because I also had a fear of it retracing back up and hitting the fair value gap. But I saw that the price did not break structure. Instead, it was just a temporary move up back up to the upside to hit the order block, and it did not break structure, so it was a low probability of hitting the fair value gap that's marked above. Now, this is a very tight stop loss placement that I did here. I entered on short and I placed my stop loss on the wick of the candle that hit the order block, and I placed my TP at this predominant low that I believed was going to get hit, which apparently not. Well, so price, this is what baffles me. I do not understand why it didn't hit my points of liquidity that I did right here, because it was showing strong bearish momentum, and yeah, closed. I got liquidated. Um, if I had placed my stop loss higher, I would still have been closed out. It seemed to just bounce off these lesser predominant points of liquidity. These 2 points, this point here, which I should have I, s- I still don't fully understand why this trade didn't work, but there are things I did correctly. I traded with the market through consolidation after I saw the break of structure on the 15-minute. That's why I entered short. Was a no news day as well, so there was no effect on volatility due to news. And I am pretty proud of my entry and my stop loss placement, enabling me to get a good IRR around 2 to 1 risk to reward, which is optimal for future trades. So I will have to keep this trade in mind. Only thing I could think of that I did wrong was being too optimistic about where price was going to draw to. But this point of liquidity I deemed to be pretty high probability, so I'm not sure actually. Yes, well, I will keep this in mind. I will keep looking at this, and that's going to be the first trade. I still need to be sharper while monitoring my entries. That's going to give me a better entry because, trade setups do get formed in a matter of split seconds. So that's for next time. So any advice would be greatly appreciated, and that's my first trade. Thank you.